Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Thursday, September 18th. Well, firstly to gold futures, and here we see the second last candle on the chart as the candle has finished trading, continuing the trend to the downside following the bearish candle from the previous day's trading. But the buyers have come into the market today closing with control, closing up very close to the high and certainly well above the midpoint level, and we have a white body candle, so suggesting a possibility of a change of trend here. The market did find support down at the 1218.8 level. That has been an important level in the previous trading, but we do have a bearish market in all three time frames, and I suggest that if we do see a change of trend in the first time frame, we're looking for a higher high and a higher low. If we do see that, there is potentially strong resistance around this 1237.9 level. We have the Tenkan Sen trading around there. The Tenkan Sen is pointing down very sharply, reflecting solid downside momentum. And that's the first area that we're likely to see very strong resistance coming in. With this market being bearish in all three timeframes supported by the Chica span, it's likely that if we can breach this 1218.8 level in a bearish manner, we could see the market testing down to the round number 1200. But with the sellers losing commitment, it's not so clear that we will be able to breach that level at the moment, and we could see something of a temporary retracement and then the sellers eventually come back in. But looking at the depth away from the cloud, we're still looking at overextended, so something of a rally here or a congestion area wouldn't surprise. Now, in terms of our Fibonacci extension, and here today we've seen the buyers coming in to this candle at the 38.2% level. Very important trading here. It certainly does set the market up for a potential change of trend. As always, we'll be looking for confirmation of that. We don't just use these indicators blindly. The 38.2% level is just another level like the 50%, the 61.8%, but it's what we read in the short-term dynamics, and it suggests that there's a good likelihood of a change of trend with the sellers losing control and the buyers taking control. But what we want is confirmation of that, with the market changing the trend with a higher high and a higher low. Moving next to the bands here, and here we see continued price action down below the lower band, highlighting that we have some strength in the trend to the downside. The market continuing to trade down below that lower band. If we do rally, we'll be looking for potential resistance at the 1234.5 area at the lower band there. The bands are fairly wide, not overly wide, so not suggesting that there is any great hurry for the bands to start to squeeze together and for volatility to come off, but I'd suggest that if we do see a rally here, 1234.5 may be an area that will see a resistance coming in.